Banks all over the world are failing, and the Security and Exchange Commission, the SEC, is attempting to cut off the on and off ramps to buying cryptocurrencies by suing crypto exchanges such as Coinbase and Binance. The good news is that Bitcoin is relatively stable at the $28,000 level, and I believe that we're back in a new macro bull market cycle. The bad news is that this macro bull market cycle might only last 1 to 2 years.
Have you heard of Operation Choke Point? The US government is trying to stop crypto by suing Binance and Coinbase.
Chill out, dude. Have you heard of the NASDAQ? Soon crypto will be available to trade there.
It feels suspicious that the SEC is trying to shut down crypto exchanges, but is allowing the NASDAQ to trade crypto in the future.
The news is filled with many conflicting perspectives, but I believe the price action on a chart is the most honest interpretation of reality. If Bitcoin is at $29,250, that is reality. There is no arguing with that. And based on previous price action, we can determine its trend. It's impossible to predict the future, but if we can identify a trend, we can align our directional bias with reality. Ever since its inception back in 2009, Bitcoin has been moving in 4-year cycles. I know it's wild to look at this and see a repetitive pattern playing itself out since our day-to-day lives are filled with random experiences. But if you take a step back, from a larger perspective, reality does appear to have repetitive cycles. Nature itself is cyclical. We experience 4 seasons of weather every year, birds migrate twice a year, bears hibernate every winter. Even human emotions are cyclical. Some people even have seasonal depression. Because Bitcoin's price action is driven by human behavior, the charts are a reflection of human emotions manifested into reality. A cycle is measured from the floor to the next floor. This floor happened in 2015 and the next one happened in 2019. So that's how we came up with the 4-year cycle. The direction of a trend is determined by the rise and fall of the floors and ceilings over time. During an uptrend, the floors are rising and the ceilings are rising. During a downtrend, the floors are falling and the ceilings are falling. From a cycle timing perspective, Bitcoin appears to have found a floor at the 4-year cycle mark. The previous floor printed in 2019 and the current one in 2023. So this is where we look for a reversal in direction. Currently, at the end of the 4-year cycle mark, the floors and ceilings have reversed from falling to rising. Therefore, one must accept the reality that we're in an uptrend despite all the crazy world events and macroeconomic problems we face.
But the banks are collapsing.
That's because higher interest rates were used to fight inflation.
Yeah, higher interest rates are causing my minimum monthly credit card payments to go up.
And that's also causing pain to banks where certain investments have lost value, which affects their balance sheets.
I guess that's why bank customers have been rushing to withdraw their funds from banks just in case they can't cover their deposits.
The upward price action we're experiencing in this new market cycle shows the agreement by humans that Bitcoin is finally doing what it was designed to do when it was first created as a response to the 2008 financial crisis. I do believe we may deviate from the previous 4-year cycles where we went 3 years up and 1 year down to actually going only 1 year up and potentially 3 years down. But before I show you scary evidence of that, I want to show you one more perspective on the chart that I use to confirm my bias that we're in an uptrend. Again, the data on a chart is reality, and trading volume is the effort used to produce that reality. There's an indicator I use called the on-balance volume. This blue line is simply a running total of negative and positive volume. As there's more buying pressure, the indicator moves up, and as there's more selling pressure, the indicator moves down. The calculation for the on-balance volume is more complicated than what I just described because price movement is factored in. But the overall idea is that volume precedes price. I've manually added a 21-unit moving average to assist in visualizing the data more clearly, which is the orange line. During a bullish market cycle, the on-balance volume tends to stay above its 21-week moving average. Conversely, during a bearish market cycle, the on-balance volume tends to stay below its 21-week moving average. At the 4-year cycle mark, the on-balance volume chops around as a trend reversal forms. The on-balance volume in combination with a 21-week moving average isn't a perfect buy and sell indicator, but when combined with the context of where we are in a market's cycle, It helps confirm a directional bias.
That's great to see that the effort to push the price of Bitcoin up aligns with higher prices. But why is there so much effort involved in rising Bitcoin's price?
Well, this economic mess was caused by inflation. Because of that, the U.S. government had to make the money printer go burn to help out its citizens and avoid a recession. Unlike the U.S. dollar, which has a supply that can be inflated infinitely, Bitcoin's software code is programmed to have a fixed supply, which is impossible to inflate.
So, increasing demand is greater than its limited supply.
Finally, here's why I believe Bitcoin may be in a very short 1 to 2 year uptrend compared to previous market cycles. When you look at these macro 4-year cycles, which are measured from one floor to the next, you can see that the ceilings tend to be on the right side of their midpoint. This is called a right translated cycle, and it's bullish because more time was spent grinding upwards with enthusiastic buyers than falling downwards. During a bear market cycle, it is the opposite, and I'm going to zoom in from this weekly chart to the daily chart to show you an example using this downtrend. Most of the time, the ceiling occurs on the left side of the midpoint as less time is spent pushing higher and more time is spent dropping lower as more aggressive sellers exit their positions than there are buyers. As you can see, bear market cycles tend to have left translated cycles. Again, the chart is a reflection of the ups and downs of human emotion. For more information on cycles, I highly recommend you follow Bob Lucas on Twitter. His work on cycles has played a large influence on the way I analyze charts. And feel free to give me a follow as well. I go by chartcinema.eth on Twitter, and I am very active on there. Now that we have a handle on cycles, I can finally show you why we may have an uptrend that will only last 1 to 2 years. Here's the chart of the S&P 500 on the weekly time frame, and when we overlay the chart of Bitcoin on top of it, whoa, which is in orange right here, we can see that Bitcoin has a ton more volatility, but we can see that there is a correlation. Every time the S&P 500 falls, Bitcoin falls a whole lot farther. Here's the latest drop in 2021 with the S&P 500, and Bitcoin got into a bear market for a year. As everyone is experiencing high gas prices and the rising cost of food, we all understand that inflation needs to be controlled. Back to the S&P 500 chart, I've added 2 indicators, the US inflation rate and the Fed's fund rate. Currently, we're just under 6% inflation.
And we will get inflation down to 2% in time.
Federal Reserve Chairman Powell is trying to get back to our target inflation rate of 2%. We have a long way to go. As you can clearly see here, as Fed Chair Powell increased interest rates to 4.65%, it did decrease inflation. What's surprising is that since the 90s, when the Fed increased interest rates, the S&P 500 goes up into a bull market. And when interest rates stop increasing and flatline for a period of time, the S&P 500 starts to form a ceiling. And finally, when the Fed pivots and reverses interest rates down, the S&P 500 goes into a 2-year bear market. In Fed Chair Powell's last press conference, he laid out plans for interest rates based on incoming data and a survey.
At the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025.
As you just heard from Fed Chair Powell himself, he's already telegraphed his plans, 5.1% at the end of this year, and then 4.3% at the end of 2024. Once the Fed pivots, and if stocks go into a bear market, that could drag Bitcoin down with it. So if the Fed pivots from roughly 5% down to 4% sometime in 2024, that could result in a left translated cycle, which is overall bearish. But at the same time, with a reasonable allocation to Bitcoin now, at the start of a 4-year cycle, I think we can see Bitcoin multiply in value in a relatively short amount of time. I'm thinking Bitcoin can get past $100,000 because of the weakening power of the US dollar and something called Bitcoin ordinals, where you can mint NFTs on Bitcoin's blockchain. The possibility of a store of value art which can be minted on another store of value, Bitcoin, is a narrative causing a stir because it adds another dimension to Bitcoin's use case. Similar to how gold is more than just a precious metal, but it can also be used to create jewelry. Bitcoin is a global economic system that cannot be censored by a central authority because its decentralized network is supported all over the world.
Most people understand that freedom of speech is the freedom to think.
That makes sense. If you can speak your mind, your words can affect other people's perspectives.
And you can absorb information outside of your own reality tunnel. What I'm about to tell you next is just as important. The freedom to control your wealth is the freedom to become.
If you found value in this video, please hit the like button and share this content to get the word out on this once-in-a-4-year opportunity. And if you want to support this channel, take a look at our entertaining NFT collection called Slimes, whose characters are featured in my video's cutscenes.